Hello and welcome back. This is David from the Personal Finance Squad. Thanks for joining. We are in section 2.1, Inflows and Outflows. This is really the information that we track, that is expenses that go out of the budget every month and into the budget every month. So that would be income for, say, a paycheck, or expenses such as a utility bill. This is the type of thing that is done in any business in the United States or abroad. And what that means is basic accounting principles say that you have a credit for every debit and a debit for every credit. And that gets back to what you'll hear us say as we go through the squad in these videos, that we need to make sure that things are balanced out. So if you have a bill that's $50, that means you need to have $50 in there to account for it. Hence, you have a zero balance. You have washed out the transaction. So as we look right here, we can see a few things that we talk about. Depending on the size of your family or your budget, you could have several transactions in a given month. In my personal situation in the squad, to have 200 transactions is not unnormal. So that means there's lots of tracking that needs to be done. So in very short form here, we can see what we were just talking about. So let's say our buddy Jasper here eats at the restaurant, and it's $100, and he pays with a debit card. Now the bank says, okay, here's the current balance, $2,500. $100 comes off, and that means your balance in the account is $2,400. You can go online and see that. Now, in your budget though, you had a projected amount, or he did, of $100, and the actual was $100, and then over here, you'd see the zero. So hence, this is good here, and then in the budget, this would look the same way. So this is a very simplistic sample here, but think of it as just one of these things are occurring when really there are several at one time. In any given day, you could have several transactions come out of your bank account, or if you have a credit card, you're going to have actually track those transactions against your budget amounts and to make sure that they're accounted for, that you need to pay for them out of your income. And we'll get into that a little bit later. So a couple key things to keep in mind here as we go further is managing monthly payments. And what we're saying here is that the more transactions that you have, it's more maintenance. It can be easier to miss something. The odds suggest that. However, we will not have that problem, because once you do the work and do it correctly, it'll be like riding a bike, and it'll be no problem to take care of it. So what we're saying here is that some key items are confirming payments. As we were talking about above, with the dining example, we need to make sure that we account for it, and that is a confirmation of payment. Now, a little bit deeper with that could be things with the bills that you pay that you know are coming out, and that could be, for example, we say electric company. We have a bill every month. We have a car payment. All kinds of things, right? There's several of them. A lot of this will get into automatic payments. When that is taken care of, you don't have to worry about it because you know what happens, and you'll really just be able to go online into your bank and look and see that it's taken out, and then you reconcile that against the budget itself in your sheet. Another important thing is overcharges. It can happen. You could be at a restaurant and you could add a tip to the bill. The actual transaction doesn't really clear for a couple days in most cases, and you can see that the amount was wrong. You could also see it at the gas station, for example. I've seen it where I have a double charge. They just simply made a mistake and ran it twice. So those are things, again, that it's important to just verify to make sure that what you have paid for is what comes out. Most of the time, I would say 99% of the time, if not 99.9, everything is fine. It's just what you need to do. Some other things about monthly payments are items that are over and under the projected amount. So what we're saying here is you have to understand, when you create a budget, there are going to be items that are predicted rather than fixed. Even though we're going to make every item in the budget fixed, those are projected things. A car payment, again, like up here, we know that, for example, $300 is going to come out every month. But when you do predictions that we're going to do later, those are for things like dining out. Those are things, for example, that you don't know exactly what they're going to be. You can only predict. It could be childcare. What if you go an extra day one month? What if another day a month you go less, but you predicted you would have a total amount of X and you met that number? So again, what we're saying is you can get pretty close to what you're doing, and by doing that prediction and creating that average, it allows you to have a benchmark, or markers to go against, so you can make sure that you stay in check. And for the most part, in many cases, you shouldn't go too far over or under what you predicted as long as things stay stable. The only thing you can't account for are life events and things that are unpredictable. But on the whole, in the budget world, if you project your information correctly, so in most cases, if you have projected properly, there's not going to be many instances where you are not meeting your goals. Check that. So in most cases, if you have projected properly, you should be within a small range of error. And that means what you predicted to pay for is going to be correct. And that's what we're talking about. So these are just little items you need to think about. These are just kind of rule sets. So what we're saying here is these are just rule sets. These are things that in any process that you perform, you just need to make sure you do these little things, and it just keeps the ball rolling. It keeps things smooth. Okay, so that's going to end it for this video. And what we're going to get into is now looking into the spreadsheet with adding tracking columns, so we can actually look at the project and actual and the remain, and how that money is going to be pushed around into other places, and again, to show the validation of verifying amounts and to push money in and out of other areas such as the supplemental account, so that we have a smooth flow and we track our money properly. Okay, so thanks for joining, and we will see you in section 2.2.